Welcome to Takeaways. My name is Jordan Brooks, Director of Market Analytics for ALN Apartment Data. And this month's newsletter was titled Rent Growth Stumbles Toward the 2025 Finish Line. Rent growth in particular has been getting a decent amount of attention in recent months. Momentum sort of failed in late summer. Now going into the fourth quarter, there's been a fairly substantial downshift. And so we wanted to dig into that a little bit in this month's newsletter. A couple of areas that we didn't touch on though in the article. One was a price class perspective. And there's some interesting notes here. So when you look at price class rent performance over the last year, all but Class D are still in positive territory. So there has been a softening in recent months, as we'll get to in a second, but just on a year-over-year basis, classes A, B, and C, all at least in positive territory. And that's come along with, as we all know, a pretty significant surge in apartment demand this year. So that's been positive. In terms of Class D, year-over-year rent growth is negative by a little over 1%. So again, not a huge decline, certainly relative to some of the recent years that we've seen, but nevertheless, Class D in negative territory over the last year. Now, if you zoom in a little bit from a time perspective on that, it's really just been in the last 3 months that we've seen rent growth sort of take a turn toward the negative, and really just in the workforce housing segment. So looking at just the last 3 months, sort of late summer now into early fourth quarter, Classes A and B are still in positive territory in that period, though in particular Class B has cooled. But if you look at the workforce segments, Class C and Class D, both are negative over the last 3 months. And for Class D in particular, the loss has been about a 2% decline just in that 3-month period. So over the last year, Class D is negative by 1.1%. And the last 3 months, it's declined 2%. So really, Class D up until the last handful of months was also in positive territories. This is something that, again, occupancies, though they've gained ground this year, remain soft relative to sort of the historic norm. And then now we're moving into the point of the year where we expect leasing demand to slow, occupancy to slump a little bit, and rent growth to slump a little bit. So that's kind of the picture on the price class front. Another aspect that I wanted to mention, we have a recent blog post up on our website that looks at top performing markets for rent growth over the last year. I wanted to just spend a second looking at some of the bottom performers and looking, I would say specifically at the primary markets. Again, some of the smaller markets, because of their size, you can get larger, either positive or negative percent change moves. So looking just at the primary markets, 60% roughly of primary markets around the country are below the sort of 3% benchmark that you often see in terms of 12-month rent growth. So again, most of those markets are in positive territory, but we're talking about sort of tepid rent growth, even if they're above zero. Only 5 primary markets are in negative territory over the last year, and those would be Denver, Austin, San Antonio, Phoenix, and Las Vegas. Again, a lot of that has to do with elevated supply over the last 2 to 3 years. You'll notice, the Mountain West represented pretty well there, and then the 2 Texas markets. Really, 5 markets out of 34 primary markets around the country in negative territory is not terrible. Again, I would say as we look to the end of 2025, there are probably another 5 to 8 markets that are in danger of slipping into negative territory in the coming months. Again, just because we saw rent decline in October, we'll likely see rent decline either in November or December, or potentially both in a lot of these markets. And so you've got, again, about 5 to 8 markets that are right over the threshold of positive right now that could slip into negative in the coming couple of months. So that's kind of the picture on rent growth. Again, as we get to the spring of 2026, just from a fundamentals perspective, the industry's looking actually quite good. So we would expect rent growth to turn the corner as we get to spring of 2026. In terms of upcoming speaking events, I don't have any other than an ALN webinar that we'll be putting on December 2nd. So Multifamily 2025 recap and 2026 outlook. That's going to be at 10 a.m. Central, 11 a.m. Eastern, again on December 2nd. Basically, we'll be spending an hour looking at the important aspects of multifamily performance from this year, what it means for next year, and then we'll save some time at the end for any questions or discussion with attendees. So be on the lookout either on my LinkedIn page or any of ALN's social media channels for registration details for the webinar. Again, that's coming up in about 2 weeks. Other than that, be sure to check our blog, alndata.com/blog, for additional written content that we're putting up, and then search for ALN Apartment Data on your social media platform of choice for all of our content there. Happy Thanksgiving, and see you next month.